Hey traders, it's Hima here. I've got a skinny dip. How to forecast when the market is correcting lower. Today's Tuesday, September 8th, 2020. Important reminder before we take a look at the charts that trading and investing can be extremely risky business. Therefore, it's your responsibility to evaluate any information, opinion, advice, or other content contained in this video. So here's the deal. When the market's correcting and it's correcting lower, right? You're in an uptrend, things are looking good, and then wham, out of nowhere it seems, it starts to fall, you can still use the tools and loss forecasting trading system. So the first thing to do is to take note of the price and time of the most recent correction in the uptrend. And when it comes to the market, which I think of as the S&P 500, specifically the E-mini futures on the S&P, I actually like to go up a couple time frames and look at a weekly, and I'll show you that in a second. Next thing you do is consider these measures, right? The price and time of the most recent correction when forecasting the current correction within the uptrend. So instead of just using your forecasting tools independently, you can relate them back to the prior forecasts to see where there is a confluence of factors suggesting that the market might at least pause at that price low or support. Finally, we monitor the price action for a hit or a miss on the forecast and be ready for a trade setup that fits your risk-reward parameters. So let's take a look at the charts and these steps together with it. So here we have a weekly chart of the front month of the E-mini S&P 500 futures contract. Now the front month on the ES rolls over every 3 months, and that's coming up soon. But we're still going to look at the current front month, U20, that's September 2020. Now I want you to take a look at the weekly chart, right? Last week just looks ugly, right? But what is last week? Not only is it a red candle, it was an outside bar range. It posted a higher high and a lower low than the previous candle. And guess what? The last big correction that we had on the ES back in the summer did the same thing. There was a red candle that posted a higher high and a lower low than the previous. So that's the first observation on the price action tied to the last correction. The next observation is the amount of time it took. So on the most recent correction, not the current one, but the most recent one, there was this outside bar range, and then the following week did trade even lower, but ultimately ended up being the end of the correction lower, leading to consolidation, right, an inside bar range, and then a resumption higher. So this gives us some idea of what might happen coming up soon in the current price action. Okay, there's no guarantee that the current correction will unfold exactly the way as the last one, but it is a helpful guide. So now that we've done that first step, take note of the price and time of the most recent correction in the uptrend. Now we consider these measures when forecasting the current correction within the uptrend. So now I've gone ahead and applied the loss forecasting trading tools, and what it's suggesting is that this week, okay, this current week is actually the likely week for a low to form, but that low is likely to form down towards 3290.25. All right, so now that we have the forecast of the current correction, okay, an expectation that it should fall to the price of 3290.25, with the expectation that this should occur during this trading week, let's look at the daily chart to get some insight on how we would do step number 3, monitor the price action for a hit or miss on the forecast and be ready for a trade setup that fits your risk reward parameters. So now here we are on the daily chart of the ES, and this purple line is still based on the weekly forecast, so week ending Friday, September 11th. But remember, when you take your forecasting tools and apply them on a lower time frame, you can get even more precision. So those of you using the loss forecasting trading tools, if you run the forecast in the daily, you'll see it actually falls to a day earlier in the week. Now, we still have the same price target. That won't change if you're measuring the same cycle. So take a look back at the last correction. See how we were talking about the price action back in June? It fell over the course of 4 or 5 days. Well, here we're about that time in. We're about several days in comparable. And again, just because we compare to a past correction doesn't mean the current correction is going to unfold the exact same way, but we can use these items as a guide. Now let me bring in the momentum that's going on here, right? So what's really interesting is that currently you can see the RSI power zones are working off their overbought resistance levels. Okay, the bull resistance power zone was reached and the market's quickly wearing off those conditions. What's going on right now with price and momentum still leaves the door open for a higher low to form in price on the daily chart, for the next leg higher on the ES, or at least a return to the contract highs, a retest. Okay. So those of you at the 4 zones RSI coverage system, the signal, the setup, it's not 100% ready yet, but if you look at your charts and your various setups for the RSI power zones, you'll see what's emerging here. That might even provide an opportunity to calculate an upside target. Again, we're still here on step 3. Monitor price action for a hit or a miss on the forecast and be ready for a trade setup that fits your risk reward parameters. All right. The show's not over. We're still watching all this unfold. But you want to make sure that you don't just stick your hand out and buy just because the forecast says to. You want to see price actually stabilize or form a low at those levels. So those are the 3 steps to forecast when the market's correcting lower in an uptrend. Put the 3 steps to use to manage the current correction, and I'll catch you on the inside. You can sign up at himareddy.com/gift to get my hot, timely, actionable updates as soon as I publish right to your inbox.